Good morning, everybody. Hope everybody's doing well. TGIF, thanks for joining us this morning. We'll let a few people filter in, then we'll get going in a few minutes. If you're joining us on X, go ahead and like and subscribe and share our content with all your followers. If you're joining us on YouTube, like and subscribe also. You'll be notified when we go live with content intraday or post-market prep, as always, when we go live. So. Good morning, Will. Thanks for joining us. Got my Ohio State gear on. Heading to the game this weekend. So if anybody is a Ohio State fan and is going to be at the game, let me know where you're going to be at. So, Penn State. All right, that's good. As long as you don't take our offensive coordinator, Brian Hartline, will be good. Or if you're a UCLA fan going to the Ohio State game this weekend, let me know. Be happy to meet up. We can chat. All right, let's go ahead and get started. A little after 9. See if more people filter in. But all right, as always here at Game Edge, we start with our 3 pillars: sentiment, structure, and trend. Obviously, the first pillar we start with is trend. We always want to be on the right side of the market, as 75% of stocks or the overall market move with the trend of the market. Currently looking at our market trend model is based on the tick index. The bolded white line you're seeing here obviously is the cumulative tick, or what we refer to as CT. These shorter term moving averages, we use those for momentum moving averages, basically just indicating buying versus selling in the overall market and the trend in a shorter term time frame, 1 to 3 days, or intraday instantaneous is the bolded white line. Yesterday, obviously into the morning hours, we had already seen some consolidation in the previous day into these shorter term momentum moving averages. So if you're long, that also just gives you an indication that you should tighten your risk up a little bit and be prepared, obviously, for a failure to the upside or to the downside. So we'll continue to watch that. And then early on in the morning, we already had a failure of those short term momentum moving averages. And our filtered cumulative tick up here, which is institutions, was already under the 0 line and trending to the downside, indicating institutions were selling. So if you were thinking long coming into the morning, obviously your thesis was invalidated very early on. And then once we moved below these short-term moving averages, you should have been completely risk off and then moving to the downside. So a couple other tools we were watching intraday yesterday gave us a confluence and confidence that we were going to have a trend down day. So we'll look at those. New breadth indicator, new highs versus new lows. New highs were outpacing new lows at the start, but not by a significant margin. And then new lows took over roughly midday also. So again, multiple indications that if you were thinking long or bullish, that your thesis was invalidated very rapidly. Right now we're into the colored ribbon. The colored ribbon is our longer look back period. Red above cyan is bullish. But when the bolded white line or CT moves into the colored ribbon, this turns our mechanical portfolios off, our P-Trans to PX portfolio, as well as our wheel strategy. So we will not be entering positions now as those are turned off. We had a couple really nice trades this week. We closed Cisco and JPM yesterday, obviously for a very nice gain. Cisco obviously had an earnings gap up, but then we were met with our portfolio turning off for today, so no entries there. What we would look for now is the bolded white CT to stay above these colored moving averages and then start moving back to the upside. We'd need to recapture these shorter term, these momentum moving averages, or what we for railroad tracks very quickly. If we emerge below the colored ribbon, then obviously we'll be risk off and we'll be back to a sell the rip or sell the bounce mode as we were over here until we recovered the colored ribbon. This worked out very nicely for our members as we were under the colored ribbon, and that changes our thesis So again, we're at an inflection point with the market trend model. Obviously, a significant gap down this morning in selling. So most likely we'll emerge under the colored ribbon. So we'll continue to watch that. If we stay or live below the colored ribbon for a significant amount of time, again, we'll be selling the bounces until we recover the colored ribbon, or at least a shorter term railroad track moving averages, which is your 1 to 3 day kind of look period. All right, moving on to the SPXA. We're moving on to the SPX, which is the largest, most notional value. Good morning, Tom. And that's why we look at the SPX. That gives us an idea of where market makers, dealers, and market participants are positioned. We separate the SPXA from the SPXP. I think we're the only service that does that at the moment. The reason is the SPXA obviously is your 40,000 foot view, or your tankers out on the ocean steering the overall price action. These are institutions. These contracts, as you'll notice over here in our web app, do not turn over as rapidly as the SPXP. So that gives us an idea of positioning into the longer term time frame. Obviously, this is into the November expiry. So we are call dominated on the SPXA, but the key takeaway here is we've added some inserted charts is we're going to open in significant put dominated territory. The other key takeaway is we always talk about the transition levels. Transition levels give us an idea of where structure is, where it is advantageous to be long above the transition areas. If you're in the transition areas, can be extremely choppy. And if you're below the transition areas, that is a weak structure or bearish. So very simple 1, 2, 3 states. And that's what we like to convey to our members to look at these charts, do the same thing day over day. We also look at if the transitions is moving up or is the transition moving down. Transitions moving up, that is indicating out of the money call speculation, not out of the money put speculation to the downside. If the transitions moving down, that would be out of the money put hedging, as well as could be a reduction of out of the money call speculation. We have a couple other tools to help us look at that mosaic also. But as we're talking here, the observation was this has moved up from 67.70, which is not bullish, as some of the out of the money calls have closed. So that the top level of the transition was actually expanding higher, indicating that the out of the money calls were closing, and we're exposing those in the money puts overhead. As you always know, if you follow us any amount of time, if we have significant in the money puts overhead, it's going to be difficult for price appreciation. As we always say, we need speculation to the upside versus out of the money calls for price appreciation. And if we have in the money puts above us, that's going to be difficult. Same conversely with the downside. If we have in the money calls below us, those will be supportive. But if we have out of the money put speculation, that's a weak structure, possibility of moving down. So this is the SPXA. We are call dominated, but we're opening in a significant put dominated territory, and we'll have significant in the money puts overhead via the institutions and SPXA. So it's going to be difficult for price appreciation, at least into how we're seeing the positioning now into this week and the possible November expiry. So we'll continue to watch this day over day. All right, moving on the SPXP. Difference between the SPXA, SPXP, these contracts turn over much more rapidly, as you'll notice by our web app here. These expiries obviously are 0 DTE, and you can aggregate these into multiple days or multiple weeks, depending on what you want to look at for expiry. Excuse me. It's very easy via our web app. You'll notice that we are put dominated into this structure. Implied open was 66.79. It's actually below that now. So just a significant amount of net delta overhead. You'll notice that these are just completely red. Obviously, a very weak structure, going to be difficult for price appreciation. You'll notice the transition has expanded, again, indicating that we've lost those out of the money calls above us. We have in the money puts now above us. So again, price appreciation will be extremely difficult unless we see some reduction in that via a couple mechanisms. One would be expiry via the date, or would be mechanical closure. So those are the only two ways that we'll see the reduction in the in the money puts overhead. The only other way we would have would be the out of the money calls would just significantly ramp up, and then our GEX ratio, what we'll go over here in just a minute, your call to put ratio, which is your short dated call gamma versus short dated put gamma, and that would obviously significantly increase, and then you'd have out of the money call speculation. But as of now, significantly weak structure. Key takeaway is 6,700 overhead is going to be an area to try to get above. If we do not get above and stay below that, the charm will continue to grow with these in the money puts overhead. It will be a significant headwind for price appreciation. All right, let's move on to the SPXP GEX ratio. I want to talk about this really quickly. This is like a put call ratio, but we add a time component, which is gamma. So obviously, if the short dated call gamma versus put gamma is significantly low, then puts are controlling the overall complex. If it's high, as you've seen over here, then calls short dated call gamma is controlling the complex. That is call speculation, so price appreciation. Put speculation to the downside, usually price depreciation. So you notice this GEX ratio has dropped significantly below 1 with the move down yesterday. We were hovering around this 1.5. The key takeaway was we were not seeing a overall positive slope or appreciation in the GEX ratio as SPX spot price was moving up. So already giving us a negative divergence, kind of a cautionary flag that the out of the money call speculation was not keeping up with spot price appreciating. So in that aspect, we're always wary or cautionary of supportive action when the out of the money call speculation is not being not supporting price moving up. Obviously, that resolves one of two ways. The GEX ratio will continue to rise as short dated call gamma comes in, supporting price, or spot price will actually drop because your call speculation is not supporting the move up. And that's what we got yesterday. Significant selling in the overall market and significant out of the money call short dated put gamma going into the complex, overriding the overall ratio. So key takeaway, this is bearish. As we're below the 1 level, we would need to recover that 1 level, indicating that call speculation is taking over or trying to take over and reverse the overall significant put speculation to the downside. But as of now, we're coming into a significantly put dominated bearish structure for today. Again, not saying we can't bounce. We absolutely can bounce, but there's going to be significant headwinds to the upside for price appreciation. All right, let's move on to the delta balance. Again, as always, all of our charts here at Gamma Edge are interactive. You can scroll over, zoom. For spot price at 66.57. We are bouncing a little bit. We're back towards 66.70 now. So this won't change significantly as I ran the delta balance earlier also. Key takeaway is we separate this from the left-hand plane, which is below spot price, all the structure below spot price, the right-hand plane, all the structure above spot price, and then the aggregate is the blue dotted line, which is the delta balance. Green right-hand plane, red left-hand plane. The key takeaway is that these are both in negative slopes. The delta balance is now pegged at -1, indicating full call or full put domination of the overall delta balance and put speculation to the downside. So what we would need to see to turn this around, the left-hand plane and the right-hand plane would need to start moving back above 0, indicating short-dated put gamma or put speculation or out of the money put hedging is leaving the overall complex, and that the delta balance start rising back up, indicating out of the money call speculation. But as of now, they both have negative slopes and they're well below 0. Projection on out in time. That's what's perfect about this tool is we can see how market participants are speculating into next week. Scroll over, this is the 17th. Obviously, this would be Monday on out into the 18th, 19th, and 20th. So next week is already looking significantly weak with the overall structure as it is now. Now, this can improve from today into Monday, but we're not anticipating a significant price improvement. So if you're looking to go along the overall market, you would need to see this projection on out in time, this structure moving up above 0, the right-hand plane and left-hand plane with positive slopes, indicating that out of the money speculation is starting to come in next week. But we're not seeing that at all. So again, could have a bounce today, but the overall market speculation into next week in structure is still significantly weak. So longs heading into the weekend may not be your best overall play unless we see a significant change in sentiment, structure, and trend as we head through the Friday. All right, net stack command. Basically, this tool is telling us the highest sensitivity strikes for today. Key downside levels. I posted on X this morning just a snippet of our full expiry game plan. Our 0DT game plan basically goes level by level, and what we're looking at based on the overall structure, basically net stack command. To the downside, 66.25. These charm levels, this is where we could be supportive if we see a move to the downside. Out of the money puts, these will continue to grow and they could be supportive. Also, caveat here, those can be completely overran by intraday call versus put speculation. So if we see a significant put speculation to the downside via our intraday tools, which is our vol M command, and as well as our market trend model, then that 66.50 level and 66.25 can completely be obliterated to the downside. As first order Greeks, out of the money puts, in the money puts. There's always the first order Greeks are going to override everything else. So mechanical opening and closing of contracts is going to drive spot price. If I'm opening out of the money puts, my book is getting more negative. Dealer book is getting more positive because they're short those puts, and they have to they have to sell the hedge that overall book. And that will just continue to drive spot price to the downside. So again, 66.50 out of the money puts, that would be a first area we're looking for a bounce, which we've already touched this morning, roughly. That's kind of a wet sponge area. We've tested 66.56. Retest of 66.50 would be extremely important for the out of the money puts. If we lose 66.50, we'll be adding more negative deltas to the overall complex. And then 66.25 would be that next area to the downside we'd be watching. Upside, we talked about 6,700, 6,750, obviously 6,800. You see this significant left-hand plane integral overhead, as well as the in-the-money puts overhead on the charm side. Again, these will continue to be a headwind as long as we're below 6,700. Recapture that 6,700, then we could start unwinding some deltas. You'll see the net gamma here at 66.80. Again, and get above that, we could start unwinding some of the deltas and then have a move to the upside towards 67.25 and then 67.50. You'll notice the Vanna here. Again, so we see volatility drop. Again, 66.25 will be adding significant negative deltas to the downside here. Again, that could continue the price depreciation to the downside. 6,700 in the money puts overhead, volatility drop. We capture 6,700. We could add some more positive deltas and move above that level. So that would be 67.25 and then 67.50. So you see the goalpost in the sand. You see the key sensitivity areas as of right now, 66.50, 6,700, 66.25 to the downside. And then, as I said, 6,700, 6,725, 6,750 to the upside. All right, let's go ahead and move on to zero DTE structure. Put dominated to start the day. Again, we'll be opening roughly around 66.70, somewhere around in there. 6,700 will be that first level to the upside that I already discussed. If we hit a failure there, we could see a significant move back to the downside, depending on what the intraday market participants are doing. And then 67.25, that's the PGEX level to the upside. Again, a significant level that you're going to watch for price interaction. And then the ultimate one up to the upside, 67.50. That's the confluence of GEX and DEX transition, as well as the bottom of the DS. Not anticipating we recover that very rapidly for today. 6,700, again, key area we're going to watch. If we do recover that, then we could have a move up towards there. But again, significant in the money puts overhead via the SPXA, SPXP, as well as the zero DTE. So we'll continue to watch that for the day. All right, moving on to this tool for our Volam tool. Again, we posted this last night. This is a key tool to watch for intraday market speculation and what market participants are doing. So we'll go back. Obviously, this is what was happening with the trend down day. We'll go back here as it will reset here in just a minute. You'll notice that these linear fit lines and call centroids rapidly move to the downside roughly around the 11 o'clock hour. So you watch here, we flattened out our call centroid, and then look at these rapidly moving call and put centroids to the downside. Green is calls, red is puts. This was already indicating a trend down day roughly by 11 or 11:30. So all you had to do, at least from our perspective, was market trend model was failing. Volam was indicating out of the money speculation to the downside, and we were losing key levels and seeing large dealer adjustments to the downside. You just position yourself with risk management and understand that we're in a trend down day. And when both of these slopes are to the negative and trending down, as you're seeing here, then you just basically decide an area where you want to get in, and then you can ride to the move to the downside. And then you get to some key levels to the downside, which was 6,600. And then we saw a slight bounce there, which we were anticipating. But again, key tools for the intraday market speculation, understanding there's three states, basically: trend down day, trend up day, and if these are crossing, that's a consolidation day. Very simplistic to get on the overall SPX structure and ride a move down when all of our tools are indicating that. Taylor, or one of our team members, posted a nice trade yesterday. I think he was only in 15 minutes, significant move to the downside, and just rode it for a nice gain. So here's where we're at in the overall structure. We'll look at Tesla here in just a few minutes. Individual equities this morning, we're below 6,700. We tested 6,750. Again, key area to the downside. If we lose, we'll be looking at 67.25. Bounce to the upside, 6,700. That's negative GEX. And a key area to watch for failure, opportunity to short if the market trend model continues to the downside. All right, thanks everybody for joining us. We'll move over into our individual equities. As always, Game Edge is providing this content this morning for free. Jump in our newsletter at gameedge.us, put in your email. You'll be delivered this beyond the bell during the weekend. going over our strategies and thesis as well as our tools. And as always, click on our free courses, all free education, GameEd's Fast Pass. This is our flagship options course and education course, all for free. Make sure you check that out with your email. All right, let's go ahead and jump into individual equities for some people. Thanks again for joining us, everybody. Hope this was useful or valuable education. Give me some feedback in the commentary section. What you'd like to see different in the morning or anything expanded, I'd be happy to do that and talk to our team and see what we can add to that. All right, so Tesla is now put dominated. It is holding extremely well as the market was moving lower as well as consolidating. We've seen PGEX and COI completely drop now towards 402.50. It was up at 500. Spot price 385. We're well below INGEX and transition, so that's going to be difficult to move up. After this expiry, we're still put dominated. So you see a significant change in the leaders in the overall structure and sentiment. And that's what we like to look at. We actually look at these top stocks, the Mag 7 stocks, every day for sentiment and structure. And those obviously are lead the market. So if those are changing to put dominated, then that gives us an idea that the overall market most likely is going to pull back. So we'll continue to watch this. Energy stocks were actually doing significantly well. XOM now is put dominated for this expiry for today. You're within transition area below COI. You're right at PGEX. So again, probably difficult to price appreciate. Next week, it is call dominated, but we do see PGEX and COI at 120. So not a significant upside speculation XOM. I would anticipate if we went through all the other tickers that anybody would post that we're seeing the same thing happen. Structures deteriorating in most of these stocks, even though they are still call dominated. The upside structure most likely is deteriorated a little bit. So upside appreciation is probably going to be difficult. So what do we look for? We wait for these structures to start to improve. They change back to call dominated, indicate that out of the money call speculation is going in. We actually have a couple scanners for that. We have call dominated Delta scan, gives us a list of stocks that are changing to call dominated via the Delta. So that would indicate out of the money speculation to the upside. Those would be the first stocks we would look for on any type of bounce. And then we also have new call dom del scan. Basically, that is telling us what stocks are changing to new call dominated. So if they're changing from put dominated to call dominated, again, those would be the first stocks that we jump in for speculation to the upside when the market decides to move back to the upside, which we know will happen at some point in time. So, all right, thanks everybody for joining us. Appreciate all the content. Everybody have a great Friday. I'll hang around for just a couple minutes if anybody wants to discuss anything. Again, like and subscribe and be notified when we go live. As I said in the beginning, go Buckeyes. We'll be at the game this weekend for UCLA on campus. So if anybody's a Buckeye fan, send me a message or send us a message via the X, and we'll be happy to meet up and chat. Or if you're even a UCLA fan and you're going to the game, we'll be happy to meet up and chat also. So, all right, thanks everybody for joining us. Make it a great weekend. As always, manage risk as we open into a significant put dominated structure. We could see a bounce, absolutely, as we see some put monetization from in the money puts, getting rewarded for the risk, holding overnight, bounce up towards 6,700 to be that first area that I'd be watching for failure or to reclaim, and then 6,750. So, all right, thanks everybody. Make it a great weekend.